Welcome to Sentiment Trader. Today we're going to be looking at Sentiment Trader's proprietary Fear and Greed Indicator. This is one of our most popular indicators and is a great tool for measuring overall market sentiment. So let's get into what is Fear and Greed, how these indicators are measured, and how to read the representative charts. So the Fear and Greed Index is measured on a scale of 0 to 100, where excessive optimism would be 80 and excessive pessimism would be 30. And in this case, of course, optimism represents greed while pessimism represents fear. So what makes up the Fear and Greed Index? We have number one, the VIX. Now, this is probably the most well-known measure of market sentiment. And the VIX measures expected price fluctuations or volatility within the index over the next 30 days. So the VIX often drops on days when the broader market rallies and it soars when stocks plunge. As you can see, volatility went berserk at the start of the pandemic in March 2020. So the Fear and Greed Index uses increasing market volatility as a sign of fear. So next is the put-call ratio. And unlike the VIX, the math on this one is pretty intuitive. When the ratio of puts to calls is rising, it's usually a sign that investors are growing more nervous. Next is the McClellan Volume Summation Index, and this measures the amount or volume of shares on the NYSE that rising compared to the number of shares that are falling. So a low or even negative number is a bearish sign, and the opposite is true of a bullish sign. So next up is the S&P 500 125-day moving average. When the S&P 500 is above its moving or rolling average of the prior 125 days, that's a sign of positive momentum. But if the index is below this average, it shows investors are getting skittish, and the Fear and Greed Index uses momentum as a signal of fear. Next is the net new 52-week highs and lows on the New York Stock Exchange, and this shows the number of stocks on the NYSE at 52-week highs compared to those at 52-week lows. And when there are more highs than lows, that's a bullish sign that signals greed. 6, safe haven demand. Safe haven demand shows the difference between the treasury bond and stock market returns over the past 20 days. Bonds usually do better when investors are scared, and the Fear and Greed Index uses increasing safe haven demand as a signal for fear. And lastly is junk bond demand. So it's kind of in the name of this one. Junk bonds typically seen as riskier investments. And if investors want junk bonds, the yields drop. And likewise, yields rise when people sell. Junk bonds are high risk, high return. So the Fear and Greed Index uses junk bond demand as a signal for greed. So Sentiment Trader's Fear and Greed Index is unique. However, it's based off of CNN's Fear and Greed Index, which could be argued it's interesting that CNN would develop something called the Fear and Greed Index, as these are kind of two of the motivating factors that drive our 24/7 news media cycle. And in a funny way, it kind of makes the indicator even more accurate, as the media does influence, obviously, fear and greed within the market, because it can help investors buy when others are fearful or sell when people get too greedy. And, in the competitive game of venture capital, it is often the contrarians, like the ones who uncover the information, who take the risks at times when others don't. Those are the ones who go against the grain, against public sentiment, are usually the ones on the right side of a low probability bet. So they're the ones who find the most success and usually come out on top. And this is a great tool to kind of tap into the mindset that they use.